SMSFs do give people a lot more control. It's one of the few ways in which you can get exposure to cryptocurrencies.
You cannot buy Bitcoin or cryptocurrencies in your traditional industry super fund, right? You can only do it in an SMSF.
If I wanted to get Bitcoin exposure in my portfolio and I go to speak with a financial advisor, 9.9 times out of 10, the financial advisor will turn you away. Not all accountants are crypto savvy. What a financial advisor can advise you on is whether or not a self-managed super fund is the right vehicle for you. What they can't advise you on is whether crypto should be in it.
Yes. I'm Matthew Fraser, and this is Crypto Collective. After making millions with Amazon and e-commerce, I realized that if I was starting again today, crypto would be my first choice. I'm here to help you take your first steps and build real wealth. Ready to set yourself up for life? Let's go. Hey Simon, well thank you so much for joining me on Crypto Collective. It's really great to have you here. I appreciate you taking the time because you've got all this experience. You are a lawyer, you've done a law degree, and you've also got a tax degree, I would say. You're a tax specialist.
Yeah, the two evils.
The two evils. But this is not going to be a boring conversation because people, I think from the outset, law and tax, we're going to switch off now. No, this is going to cut to the core of a lot of topics that are happening right now, including, I'm going to drop it, unrealized capital gains tax. We're going to touch on that. And I also want to talk about, of course, SMSF, why it's important for people. Of course, you know that all of my SMSF carries Bitcoin. So that's going to be a big topic as well. So I guess starting off, Simon, why should people have an SMSF, or why should they consider an SMSF as a part of their, I guess, wealth strategy?
Yeah, I think self-managed super funds do give people a lot of control. Mm-hmm. Definitely, it's not a light decision to make when you set up a self-managed super fund, or if you want to set up one up. Definitely need to get professionals involved, see a professional advisor or a tax agent to help you set it up properly, so then you can worry yourselves about the investment decisions as opposed to all the housekeeping and bookkeeping. Mm-hmm. But definitely SMSFs do give people a lot more control. Mm-hmm. It's one of the few ways in which you can get exposure to cryptocurrencies.
Yes.
You can't typically get that exposure through industry.
I think that's a big one.
Funds.
So let's just expand on that for 1 second, because people who are new to this, they may not realize this, and that is that you cannot buy Bitcoin or cryptocurrencies in your traditional industry super fund, right? You can only do it in an SMSF.
That's correct.
Mm-hmm.
Not many retail or industry super funds that I'm aware of have Bitcoin on their approved product list. So mm-hmm. if you want Bitcoin exposure in your retirement portfolios, then a self-managed super fund is one of the ways to do that.
Mm-hmm. I talk about Bitcoin all day, every day. Tell me, I guess, or to the viewers, why should people consider having Bitcoin in their superannuation portfolio?
Yeah, that's a really good question. So if you consider Bitcoin as a long-term investment, a super vehicle like a self-managed super fund is meant to be for long-term investments. And I'm not sure many people know this, is once you reach a certain age, any profits or gains in your self-managed super fund become tax-free. Mm-hmm. So especially if you think that Bitcoin is going to go from 100K US that it is right now to maybe 500 or $1 million, depending on who you listen to, or even if it's like 150K as a modest price target.
And that's this cycle though, right? So maybe this year or next year?
I don't know.
We don't know, but that's the talk, right?
Exactly, that's the thing. With self-managed super funds, you can take like a 10-year, 20-year, 30-year time horizon. Mm-hmm. Over time, those lumps, those bumpy moves should even out and go in the direction that you think it will. So over a long enough time frame, a self-managed super fund helps people be more disciplined, so they don't trade those ups and downs and chop themselves up in terms of gains and losses. And
just to pull you up there, what you're meaning then is if people expose themselves to Bitcoin traditionally has some volatility, and while it's in an SMSF fund or vehicle, as you put it, there's less likely they're going to try and time the tops and the bottoms of the market. They're just going to hold it for the foreseeable future, essentially, let's say until they get to, is it called preservation age?
Yeah, the pension age, which is 60 or 65.
Yeah.
So, yeah, it forces people to take a long-term view on the assets that they're investing in, because you can't take those assets out. You can't sell it to cash and then take 5K, 10K out. You actually have to think about what 20, 30 years down the track, depending on how old you are, where the asset's going to go.
Okay. That's interesting. So what you're saying then, Simon, is that if you have Bitcoin, we'll just talk about Bitcoin as opposed to all cryptocurrencies. If you hold Bitcoin and you think that it's a peak in the cycle, let's say it gets to 150, and you think you've done some research and you think this could come back down to 100. Are you saying that you can't sell it at that point and then keep it in, for example, a stable coin within your SMSF, or you just have to hold it?
You can sell it.
You can.
Yeah. I mean, there is you can sell, but you can trade, so to speak, in a self-managed super fund. But because because it is meant to be a retirement vehicle, the sole purpose of setting up a self-managed super fund is for your retirement, then naturally it just forces people to take a more long-term view as opposed to, hey, I'm going to trade this green candle.
Right. Because of course
today.
that comes with more risk.
Correct. Yes.
Yeah. And I guess the least riskiest thing to do with Bitcoin is to just sit back and do nothing.
Yeah. And something like 80% to 90% of people who trade end up losing money. And there is asset guidance out there that says, particularly for CFD providers, that somewhere between 60 to 70% of people who use CFDs, which are very similar to perpetual futures.
CFDs?
CFDs are contract for differences.
Right.
So 60 to 70% of people who use CFDs or trade CFDs end up losing money. So that's why CFDs, which are very similar to perpetual futures, are very heavily regulated.
Yeah. I guess the same thing can be said too. Like if people have money in an industry super fund, they're not watching what their allocation is every day and selling it, trying to sell at tops and buy back in at bottoms, right? So it's the same kind of mindset, right?
That's it. Yeah.
Yeah.
I think sometimes sometimes the best thing to do is to do nothing.
Right. Yeah.
And just sit and hold.
Yeah. Now I say at this point, Simon, that the risk for people right now is having no exposure to Bitcoin. Now I have an online community. I show people how to move from an industry super fund to an SMSF. Not that I'm a tax advisor or a financial advisor or anything like that. It's just that I just show them the steps that I took. Right. And then it's up for them. I actually show them where to go and find the guidance, where to go find an accountant, where to go to find financial advisors to help them on that journey. Now, what we've found though is that there's different ways to structure this as well. So just explain to me too, would I be okay if I was to say, look, I want to keep a portion of my funds in an industry super fund and take a portion out to put into an SMSF and expose to Bitcoin? Would that be okay?
There are some people who do that, and there are pros and cons. And I definitely think the best advice I can give is to see someone who can have a holistic view of your financial affairs and your goals. Because, for example, and this is not advice, but for example, it may be sometimes worthwhile to leave some funds in the industry super fund because of the insurance policies that are there.
Okay.
And one of the things you need to consider as a self-managed super fund is whether not to have insurance. So there are a lot of complex, I guess it's hypersensitive to your personal circumstances. So there's no one size fits all.
Yeah. So Simon, for someone who I guess is not fully committed to Bitcoin, but maybe they're thinking, I need to have some exposure. I've got an industry super fund and I want to maybe pull $20,000 to maybe $50,000 out of that industry super fund into an SMSF and then expose that to Bitcoin, right? Would that be a legitimate step, you would say? Because I also note that sometimes you've got to bring through your other half, whether it be your husband or your wife or what have you, right? Because sometimes when you're on the journey yourself, you get the conviction, right? Because I know in my personal journey, there was a point where I said to my wife, baby, we're going to move all of our super to Bitcoin. Now, that wasn't day one of me learning about Bitcoin, right? I didn't just watch a YouTube video like this and just say, That's it. all of it's going. It was a progression. In fact, the way it started was my first purchase was probably, I think, $100 in my personal name. But then very quickly I decided to use a lot of my company funds and set up a company account. And then it probably was about a year, I would say, at least, maybe 18 months of doing a lot more research, me putting money into the investment, that I then said, okay, I'm now ready to move over into Bitcoin, my industry super fund. And of course, by that stage, my wife had sort of followed along the journey as well. So I'm sharing the information with her, right? Just interested from your side of things, the sort of clients that perhaps you might know of and their journeys and how it sort of plays out. And is that taking a portion out of the industry super fund, if you don't have full conviction like me, a legitimate method?
That is a very typical journey that I see. So people, they've purchased crypto in their personal names, a company vehicle or a trust vehicle, or even in their business. Mm-hmm. And then they realize that I don't have enough exposure. I don't want to bet my house on Bitcoin.
So they're saying they don't have enough exposure.
Yeah.
Is that right? They've done the research. They're like, oh my God, I need more.
Yeah. Yeah. So it could be because with living pressures these days, rent, mortgages, school fees, electricity prices, all things going up, people actually have less disposable income these days to invest in crypto, unless you're a very high income earner.
Yeah.
So naturally, if you don't want to bet the house on it, then naturally people think, oh, where is the next pool of capital that I have? And usually super, whether it's in a self-managed super fund or a industry or retail fund, superannuation is typically people's second largest asset that they have. So people's minds start to turn towards, okay, how else can I get exposure to Bitcoin? And naturally, people think about super when they get to that stage. So your story is very similar to what I hear and what I see.
Yeah, I did see, unfortunately, people should just listen to this very carefully because this is so important. You touched before, Simon, on insurance. And unfortunately, someone that I know, what they did was they moved their industry super fund for the husband, kept the wife's in the industry fund or the retail fund, as you would call it, and moved it all over to Bitcoin. Now, they realized at that point, though, that any insurances involved in the industry fund were now finished because they closed that account. They failed, though, to reinsure outside of that fund within their SMSF or even just personally, because you can do it personally as well. And unfortunately, what happened was they knew to do it, but they'd kicked the can down the road a bit. And unfortunately, that person had a very serious medical condition, which actually has put them out of work. And so I think it's really important just to tell people that this is something that's going to happen and to take action on it, because you never know when things might happen. Don't kick the can down the road on insurance.
Exactly. And when it comes to self-managed super funds, people are very headstrong. They see an asset they want to buy. It's like, I just want to buy it. And they're going to use the self-managed super fund to do it. That they'll make it happen. So that's why it's so important to balance that headstrong attitude, mindset, with someone who can take a step back, a professional advisor, a tax agent, or a specialist SMSF administrator. They can take a step back and say, hey, have you considered this? Have you considered insurance?
Right.
Have you considered these other aspects? Because, to be honest, administration and all the intricacies involved in managing your own super is an afterthought, and it shouldn't be, because in that situation with your friend or your acquaintance, it can have quite unexpected consequences, especially if they dive headfirst into it without seeking the right advice.
Yeah. So tell me then, because I've had other people come and talk to me about seeing a financial advisor, or they went to their accountant and said, hey, I'm going to set up an SMSF and I want to buy Bitcoin. And the accountant says, oh, that's a terrible idea. You shouldn't touch on that. Now, I would say that that's probably because the accountant doesn't know what they're talking about. And I don't want to broad brush all accountants, because I've got a very good accountant who actually has his own Bitcoin and crypto portfolio as well. So when I talk to him about this, it's like another day at the office. But there are people who are still, I think, stuck in the olden days, don't realize that cryptocurrency, in particular Bitcoin, is here. It's here to stay. And therefore, they're actually doing their clients a disservice. So what should people do then, Simon, if they're listening to this video and they're like, you know what, I'm going to go set up an SMSF and expose a portion of my funds to Bitcoin. And they go to their accountant or a financial advisor and They're given a very negative message.
This is a huge problem in the industry. If I wanted to get Bitcoin exposure in my portfolio, anywhere in my portfolio, and I go to speak with a financial advisor, 9.9 times out of 10, the financial advisor will turn you away because I don't want to touch it. My insurance doesn't let me advise on it, so please go see someone else. What that means is that people who actually want advice, they're out there on their own. So they have to go to find their own accountant, find their own education, find their own material, and sometimes that material is not from a reliable source.
Right.
So I think the best thing to do for someone who's being turned away from their financial advisor or can't find the right person is to really read up and just educate themselves. There's lots of education courses out there around self-managed super funds. There is a lot of information out there on the ATO website. There's a lot of information just by speaking with accountants. But you're right, not all accountants are crypto savvy. And I think that is something that a lot of industry bodies in Australia, accounting industry bodies in Australia, should really get on the bandwagon, I suppose, is to really upskill the accountants in this space.
I'll just share with you a story, Simon. My next door neighbour who's in my commercial property, about a year ago, they were setting up an SMSF and they went and bought, like most people thinking, I'm going to buy property. So they went out and bought 2 residential properties. Now, side note, I would never buy a residential property for investment ever again. Okay, I would delete that. And people are going to be like, what? This is the Australian way, right? I won't go into it, but I would never do that anymore. I may still consider commercial, but I'm even selling off my commercial properties now, putting more into Bitcoin. But this is what they did. They bought 2 residential properties. A year down the track, I spoke to her literally on the weekend. She says, Matthew, it has been a nightmare. And I thought, oh, geez, what happened? And I remember at the time, I'd also spoken to them about Bitcoin. Now, they were new to Bitcoin, so I wasn't expecting them to just run out and start buying Bitcoin in their SMSF, okay? But I sort of planted the seed and showed them where to go to find some information.
Yeah.
She said, it's been a disaster. One of the houses, okay, the second house, tenants not paying rent, trashed the property. They can't kick them out. She's been to court, right? There's all these things and I'm thinking, geez, you don't have that with Bitcoin.
No.
You know, you don't have that. And so she said, I said, actually, what happened with Bitcoin? She said, look, we went and saw our accountant and he's an older guy and he sort of just said, do not touch Bitcoin, right? It's bad. Right. You know, he doesn't know anything about it. Now, in hindsight, the property was actually the bad decision, right? But he didn't advise her not to go buy the property, you know? So I think it's really important that people get advice by people who are just educated in the space. Even if someone's educated and says, I think the right approach, Simon, would be it's a volatile asset as long as you know what you're getting into. Maybe if you're new to this, only allocate a portion of your super, not the entire amount, unlike me. That might be the way to go. So where else can people go and find then, Simon? I mean, yes, they can come to my online community and I've got guides there, but I'm not a financial advisor and I'm not sitting down with people looking at their finances, right? Who can they go and see? Do you know of people particularly that they can go and see who can give the right advice on crypto?
On crypto?
Crypto and Bitcoin.
And Bitcoin? That's a really good question. For me, my personal journey is that I was self-taught.
Right, okay.
Self-learned. And I actually do think that is where most people currently get the information. But in saying that, there is sorry, I'll take a step back and say that investing in Bitcoin in your self-managed super fund or anywhere it is a very personal choice, I think. What I'm trying to say is that unlike some other asset classes where you may rely on a financial advisor on price targets or they write a research report about Bitcoin, I still think these days when it comes to Bitcoin and the values and the reason why it exists in the first place and the whole investment thesis behind Bitcoin, it really stems from a distrust of government.
Yes.
And the financial system that we currently have. So one of the hallmarks of the current financial system is commissions. So naturally, you have people like advisors who are spruiking certain assets because they
they're
get commissions.
incentivized.
Exactly.
Yes.
Yeah. So behind that backdrop, it kind of forces people to not listen to other like professional investors or professional advisors.
This episode is brought to you by Coinstash, the crypto platform I use for my SMSF. End of financial year is the perfect time to simplify your crypto super. Coinstash offers same-day setup, Aussie-based support, and access to Bitcoin and over 1,000 digital assets. Right now, Coinstash is offering up to $200 in Bitcoin when you make the switch and make a deposit before end of financial year. It's simple, compliant, and 100% Australian owned and operated. Hit the link in the show notes and book your free call with the Coinstash SMSF team today. Back to the episode. I did this video recently and it got a truckload of views. And what I did, I got on the video and I said, this is on one of my social media channels, and I said, listen, you're supposed to actually go see a financial advisor about whether you're going to invest in Bitcoin. Now, whether that's to do in your SMSF or not, right? And I said, why would I go and see a financial advisor? Now, I'm obviously doing very well, I'll put it that way. I'm trying to be modest. And when I'm going to go see this financial advisor who's probably making like 100 grand a year, he's struggling to pay the bills as well. Like he can't afford the mortgage and he can't afford to put kids through school. And he's going to tell me about finances and how I should allocate my investments. I said, no freaking way. I'm not going to listen to them, right? But I also believe in taking responsibility for your own actions, which is kind of what you touched on before, is about you got to do your own research and understand it. I'm going to put a caveat in there though, Simon, is that some people are not financially savvy at all, right? So they kind of need the financial advisor,
correct?
Because otherwise they would just go bankrupt because they just simply don't know what they're doing, right? And I put myself in a category of, I feel like I have more nous than the average Joe, right? So everyone needs to take their own journey, I think is what you're saying, right?
Exactly. And if you don't feel confident, if you never picked stocks before, you've never bought shares before, perhaps, like you said, it makes sense to limit your exposure to the risk by only putting a portion, a small amount, into something that.
What about though? This is another question that comes up. You go set up an SMSF. And they say, look, you're only going to put $50,000 in it, and it might be all exposed to Bitcoin, right? And they say, well, it's not going to be worth it because the fees are going to outweigh the return. What's the answer to that?
When you're setting up a self-managed super fund, you do need to consider the fees. Mm-hmm. So if you have 50 grand or 100 grand or something in that vicinity, that's what I call like a low balance SMSF. Because typically these days, the average is somewhere between 800 to 900 grand.
Say that again for those people listening. The average is? The
average self-managed super fund balance per member is somewhere between 800 to 900 grand.
Oh, self-managed super fund balance, not superannuation balance, like a retail or industry.
Yeah. Self-managed super fund
Got
balance.
it.
So the 50 to 100K is on the lower end of that. And I think the main, if I can talk from a registered tax agent point of view,
put your tax hat on.
the main issue that the ATO has around these small balances is the fact that people may be tempted to take some of those funds out.
You mean for personal use?
For personal use,
right?
So, for example, like I'm short on my pay this week, fortnightly pay. Or maybe I'll just take 10K out and I'll put it back in.
Later.
Later, that's fine. Actually, it's not fine. It's not fine. So, typically with these smaller balances, it's from younger trustees or people who hasn't necessarily been in the workforce for very long, for whatever reason. Mm-hmm. So, these are typically higher risk cohorts.
Right.
So, particularly when it comes to 50 to 100 grand, if you're paying, say, a $4 grand setup fee plus a 2 or 3 grand annual fee, plus you're not getting the insurances that you would typically get in the industry or retail super fund. I definitely think it's take a step back and consider and whether it is the right choice for you. And what a financial advisor can advise you on is whether or not a self-managed super fund is the right vehicle for you.
Right.
But what they can't advise you on is whether crypto should be in it.
Yes.
although I think I'm seeing some financial advisors start to turn their minds towards this, but it's definitely 9.9 times
Because
out of 10.
I would be livid, Simon, if I had went to a financial advisor and said I want to expose some of my superannuation to Bitcoin, and then 10 years later they said no, and I said, oh, okay, well, you obviously know what you're talking about, and then 10 years later I look back and think, you know what, that 50 grand I could have poured into Bitcoin is now worth $10 million, and he said not to do it. I would be pissed to do that. So now that is a risk, I think, for the financial advisor, because could you imagine the backlash? It'd be big, right?
Yeah, it would be. And advisors dislike being
Losing.
Yeah, they do dislike that, and they do dislike losing their clients' funds. So,
But it's lost opportunity,
Yeah.
They may have said, look, keep it in this fund over here, you're getting 10%, so shut up, right? But I could have been getting more over here. What would you say then, Simon, if you do the numbers, and let's say you put $50,000 into this SMSF, you bought Bitcoin, and I understand some people are saying, look, the fees are going to be, too much, yeah. But I think what's happened is they're only looking at the fees compared to what it would be sitting in if you were getting 10% on average, not if you're getting 50% on average in Bitcoin. Then the fees become irrelevant. What would you say to that?
I do think when you set up a self-managed fund, you've got to think about what you want to invest in. And with any asset or investment, there carries risk. But higher the risk, the higher the opportunity. And as we know, Bitcoin has very high volatility. So therefore, the risk of the upside plus downside is...
But only if you sell.
Yes.
Which you can't really sell in SMSF in the short term.
Yeah, yes, but you may have unrealized losses. So for example, God forbid, if MicroStrategy gets liquidated or for whatever reason, they have to sell all the Bitcoin holdings, and Bitcoin crashes down from like 100K to like 10K,
right,
or 20K. I'm not saying that will happen. That's like a 90% loss in the self-managed super fund. And on someone who's got 100K, can they stomach a drawdown from 100K to 10K? And I don't necessarily mean to point out Bitcoin, but as you go on this journey, well, what people typically do is that they start with Bitcoin, they get a bit of interest, move to the altcoins,
right,
and then they go full risk on and say, oh, I'm going to go into this
XYZ shitcoin.
Yeah, exactly. But then if they still have capital when they go down that path, I guess people come back to Bitcoin at the end of the day.
Right.
I think that's what most people done. But it is particularly when it comes to self-managed super funds, it is something you need to take a very considered approach
Yeah.
to.
I mean, people ask me all the time about whether they should buy altcoins. I won't call them shitcoins at the moment. Say altcoins in an SMSF.
Yeah.
And I just say, look, what I've done, I don't expose any of my super to altcoins. It's all Bitcoin. And that, you know what? I actually sleep with peace, just knowing that it's sitting in Bitcoin. I'm not worried about any other altcoins, because I've also seen, I guess, in my very short time in the crypto space, that altcoins, they come and go, right? They're not sort of all there. And I always say to people, there's no nation state or major institution that's falling over themselves to buy the fart coin, right? They're all buying Bitcoin. So what does that tell you? It tells you that the asset, and of course we know that Bitcoin is also now in the US at least considered a commodity, not a security. And of course the regulations around it, are all looking for Bitcoin. So I didn't know that, Simon, that people obviously are thinking about going more down the risk curve within their SMSF. I sort of thought, I guess I just think that people think like me. So I'm just going to expose it to Bitcoin, because why would you not though, Simon? Bitcoin's already doing on average, let's say 50% compounding growth rates. What more do you need?
Exactly. And have you seen the chart of Bitcoin and the M2 money supply?
Yes.
It tracks it very closely.
Yes.
And if you do think that Bitcoin will follow that chart, M2 money supply is going right up at the moment. So perhaps it's a leading indicator. Who knows?
Yeah.
But
I think it is. Well, let me pivot this a bit, because you mentioned before about something which is, I guess, comes to the core ethos of Bitcoin, which fundamentally comes from the distrust of government, institutions, etc. And I want to lead that into what we've now got on the horizon as far as a new tax policy, which is Labor's unrealised capital gains tax. Now, I've been known to call it a theft of retirement savings. Other people see it as a good thing, and they see that SMSF holders, and this has got nothing to do with whether you hold crypto or Bitcoin in SMSF, this is just in general. There's some people in the community that are saying, well, if you have an SMSF, you're bad because you're simply taking advantage of discounted tax rates, yes, within that. But I would say, for me, let's say I've just simply moved my super into Bitcoin through an SMSF. Now, if it grows over time I'm expecting it to be just based on 50%, let's say, or even 30%, it'll be somewhere like $100 million plus dollars. It'll be substantial, probably more. Why should I be penalized for taking the risk on Bitcoin and others have the opportunity? Yeah. Why should I be penalized? It's not like I've actually put an asset that's worth 300 million into the SMSF. It's just that it happens to have just grown. So why would I be penalised? And maybe you can talk broadly about the unrealised capital gains tax.
Yeah, so I think the two main issues with the unrealised gains tax that are causing people angst is, firstly, people who are most impacted by this, apart from the super wealthy and the rich.
We'll just stop you there. What is super wealthy? Is there a parameter that is defined by the tax office?
No.
Okay, so it's really a perception.
It's a perception, yeah.
Okay.
So it's relative to at least when I use that phrase, it's relative to the individual. Mm-hmm. So to me, it means someone who's going to be captured by this tax.
Okay, so what we're talking about then is those who hold 3 million minimum in a SMSF.
Yeah.
If, just so you know, and I know you know, but so others know, if when this comes in July 1, I think it's going to be backdated to July 1 once it passes through legislation in the Senate, the Greens are pushing for a $2 million cap. So more people will be captured into this. But so let's just say that for today, super wealthy, mm-hmm. which is, I don't consider super wealthy 3 million, but let's say that's what you're talking about.
That's
3 million.
I'm using that phrase, yeah,
Okay.
from the perspective of the people who are, being upset about this.
Yes.
Oh, sorry, not upset about this, but captured in tax.
Yeah.
The main thing is that it's a tax on unrealized gains. So what that means is if you bought the property, say, 10 years ago for 1.5 mil in your super fund, and over 10 years, property prices more or less double, you've got maybe 3 mil or potentially even more sitting in your self-managed super fund at the moment. You're going to be potentially impacted by this tax, particularly if this property continues to grow into the future. Mm-hmm. So, for example, it goes to 4 mil or 5 mil. But the property is a very illiquid asset. You can't sell a brick. You can't sell half property. You can't sell a portion of it. You got to sell the whole thing. So this unrealized tax component of it means that if you have a large illiquid asset, in order to pay your tax that's levied on the balances above 3 mil, or the earnings above, proportion earnings above 3 mil, is that you got to fund it either through more contributions, savings, or you just go sell the asset.
Yeah.
And some people don't want to do that because perhaps they've bought their retirement home in their self-managed super fund. The second reason why it's causing a lot of angst is just from a tax policies perspective. I've personally never seen an unrealized gains tax. So it's always been realized.
Yes.
So even with capital gains, it's always about realized capital gains. If you're sitting on a 100K gain, that gain could dissipate in 2-3 months because of something that happens. So while it just does not, to me, make sense to tax or set a precedent to tax unrealized gains.
Correct me if I'm wrong, Simon. This type of unrealized capital gains tax has never been implemented in Australia at all, has it?
Not that I know of.
This is brand new.
Yep. Not that I know of. I mean, you could argue, if you're a tax academic, you could argue that you have unrealized gains when it comes to shifting assets
Or rates.
Sorry.
I remember someone just recently on one of my socials said rates could be considered an unrealized tax. You're being taxed on a value of property that you haven't actually sold. They're just making up a number.
Yeah. Well, one other example is if you moved assets from your personal name into a company name, like a change in the investment structure. If you're sitting on an unrealized gains, sometimes that transfer from your personal name to your company name could trigger a tax on those unrealized gains. It's called market value substitution. So I guess if you're academic, you can make an argument that there is a mechanism to tax unrealized gains, particularly when you transfer between entities. But this is something totally different. This is taking a little bit step, in my view, a little bit too far and sets a dangerous precedent.
Yeah. Well, look, even Paul Keating has come out and he said he was the instigator of superannuation in Australia. He is opposed to it. Even he's saying this is the most ridiculous tax he has ever seen in the history of taxes. I want to know is there a way, look, and everyone's going to be thinking this, is there a way that people can get out of this tax? Can they minimize this tax? If you've thought about that, obviously the first thing is you can say, well, just don't have your assets go above 3 million. Yeah, that would be a way to go. Is there anything else? Have you looked into this?
I still think that the super vehicle, whether it's an industry retail super fund or a self-managed super fund, is one of the most tax-effective vehicles that we have in Australia at the moment.
Okay. And can I say this though? The reason why,
even with this 15%
tax,
15% tax,
the unrealized capital gains tax, right? Is it going to be at 15 or is it going to be increased to 30?
It's 15% on the proportion of earnings that are attributable to balances above 3 mil.
Right.
So, for example, if you have a 4 mil balance in your self-managed super fund, the balance that's above 3 mil is 1 mil. So a quarter of your earnings gets taxed with the additional 15%. And what's important to say is that the 15% is a tax that's levied on you individually. So it's not actually a fund. It's not actually a tax on the super fund. It's a tax on you personally, but your super fund can pay it on your behalf.
Yeah. Okay. Look, I think it's an absolute insidious tax. It's a sinister tax. And I think it's going to really put a downward pressure on the economy. I think it'll stuff things up, to put it bluntly. I've heard that other countries like Sweden and Norway either did have a unrealized capital gains tax and have since removed it, or they still do have one. And in any case, it hasn't worked out well. A lot of capital flight out of the country to other jurisdictions, other nations. So what actually happened, I think it was Norway, where they expected to have, I'm just rattling off a number here, $5 billion worth of extra tax revenue. It turned out they got negative $1 billion of tax revenue because everyone just said, look, we're out of here. Yeah, we're just going to take our capital elsewhere. I think I will say you are right that the SMSF vehicle or superannuation vehicle is still the best place to put assets for retirement. Yeah, for taxes, if it's tax is concerned. The thing is though, I think why people are pissed off is because the governments for a long time now have tried to incentivize people to put funds or grow a wealth of however that's done through bonds, through shares, through properties for retirement. And now what's happened is the government has said, this is the Labor Party right now, has said, well, if you've got $3 million in this fund, you are now considered rich. And therefore, we want to take from you. Now, as I said before, I consider it theft. If people want to go to my TikTok and join in the conversation there, they can do so. It's heated stuff there, I can tell you. It's very heated. There are people that love it. There are people that love the fact that people who have more than them are getting taxed more and having part of their retirement savings stolen. And there are people there who are completely opposed to it, even if they don't have the $3 million of super yet. There was a study done recently. I can't remember the name. It could have been a bank study, and it showed, or an industry super fund study that showed that even people in their 20s now, by the time they get to their 60s, will have well over $3 million in their super fund. So they will now be taxed because the tax is not indexed. So it's not increasing over time. And of course, if the Greens come in with their $2 million tax, then there's more people brought in. I want to say one more thing, Simon, before I say. The issue I see too is that this opens the door to more unrealized capital gains taxes. Because I think what the Labor Party is going to say is, you know what, we've got a budget that we've got to pay for all these unfunded promises and ongoing expenses, welfare, etc., and we have to find money from somewhere. So what we're going to do is, because this tax has now been put through on super above 3 million, let's now drop it down to 2 million. And then a year later, let's now drop it down to 1 million. And because their whole mission statement is, we have to make the system fairer, right? Which is not trying to prop people up. It's trying to bring everyone down to the lowest common denominator. Then my fear, Simon, you can comment on this after, is it'll spread to other assets, other vehicles. Now, do I have a tinfoil hat?
I don't think so. I do find it funny or interesting that apart from yourself, you're very early to call out the unrealized gains tax. But apart from yourself and maybe a handful of others, but there was not too much media attention on this proposal from the government before the election. I think maybe it's because people thought Liberals were going to win and that Albanese didn't have a chance to get re-elected for whatever reason. Maybe people got scared of Trump or whatever, and then the rest of the world wanted to balance it out. Who knows? I don't know. But the fact that there's so much media attention now on this unrealized gains tax, a lot of people talking about it. You're talking about it again. I'm talking about it. The media's talking about it. Even some of the largest asset managers in the world, in Australia, have come out, and I think there's a petition that you can sign.
Jeff Wilson.
Yes,
Jeff Wilson.
Yes.
Yeah. So if anyone who's listening to this, Jeff Wilson, go to his website. Is it Jeff Wilson Asset Management or something?
Wilson Asset Management.
Wilson Asset Management. Go to his website and sign the petition against the tax.
Yeah, there's a petition against it now. So I still think the tax is going to go through Parliament, both the House of Reps and Senate, if I was a betting man. But what it means now is that now that there's so much talk about it, no one can really complain and say, I didn't know about it. I didn't know how it applies. I don't know how it works. So if I got my tinfoil hat on, I think this is all part of the government strategy to educate people about what this tax means, how it works. And it's working really well, and people are talking about it. So if that leads to further taxes down the road on shares or any other types of investments, then you're right.
It's just coming. I jokingly said the other day, Simon, that what happens now? Does Labor Party come in now and tax my unrealized death benefit? It's a benefit that I'm going to have, or my family's going to have when I die. Right, so I haven't actually realised it until I die. So they come in and now put an unrealised gains tax on that. I mean, the whole tax is preposterous, and I just think it really has to be shut down. I really think it's terrible, not just for people above 3 million, right?
Yeah,
it's just terrible for everybody. For those people who have basically got maybe $50,000 in their fund, they're equating people who have got $3 million or $5 million or $10 million to those who may have, like $1 billion. Right, that's how they kind of think of it. If you've got a little bit more than them, it seems like a lot. Like if you've only got 50 grand in your account and someone's got 3 million, you think they're loaded, okay? But they're putting in the same basket as Elon Musk, okay? When really those who have 3 million are far closer to the guy who's got 50 grand. You know what I mean?
Yeah.
And that's the issues. Let me change tack for a second and just ask you a little bit more about end of financial year things. You're a tax agent, so a tax advisor. And so what are some of the things that people can now do in the lead up? We're only very, very quickly coming to the end of financial year. What are things that I guess people maybe don't do, but they should do? And how they can minimize tax legally this coming financial year?
Yeah, that's a really good question. I think with Bitcoin above 100K, a lot of people, if not everyone, are sitting on profits. So tax only becomes an issue if you're profitable, if you have gains. I'm sure maybe 2 years ago or in the middle of the bear market, people didn't care so much about tax because people weren't making money. So tax is a rich man's problem in a way.
And just before you continue, rich man's problem. I love that. Before you continue, just clarify: is Bitcoin does it have capital gains tax applied to Bitcoin, or is there some other type of tax?
Yeah. So one myth I do really want to dispel is that capital gains tax is not a separate tax. It's not a separate tax on a particular asset class. It's not a separate tax under the tax code. What it is just it's actually any gains from capital gain, your capital assets get added on top of your marginal tax rate. So, for example, if you're on 150 grand per year salary, and you make a $100 gain in your shares or Bitcoin portfolio, that 100K gain gets added on top of your 150. So your total income is 250. So the difference between the 250 and the 180, which is where the marginal tax rate kicks in, the highest marginal tax rate kicks in, that gets taxed at the highest marginal tax rate. So one of the myths I do want to dispel is that capital gains tax is not a separate tax.
Okay.
Yeah.
Is there capital gains discounts though, if you hold an asset for a certain period of time?
Yes. So one of the unique aspects of the capital gains tax regime is that if you hold an asset for more than 12 months, you get a 50% reduction in how much of that gain gets added into your income. So I think discount is a bit of confusing terminology. But it is the official terminology. But actually, what it is it's a reduction in the gain that gets added to your income. So there's no specific tax for Bitcoin.
And of course, this is only going to apply to people within this financial year who have sold Bitcoin.
Yes.
Because I want to confuse the two, right? I don't want to say, this unrealized capital gains. This is just this financial year.
Yes.
For people who have sold Bitcoin, and now there will be a tax that will be applicable.
Correct. And go back to your original question about how people can save tax. First and foremost is, do you have losses from prior years? It's very tempting for people to, if you made a loss in a year, it's like, oh, don't worry about it. I know I made like a 10K loss here, but I'm not going to be paying tax on it anyway, so I won't disclose it to my accountant.
Why would they do that though? Is that because they don't know that they can reduce their taxable income with the loss, or is it because of shame?
Probably a mixture of both. Like if I promote my Phantom wallet where we trade meme coins, I'm probably a bit ashamed of that as well.
Right, you don't report that to someone. Oh, it was a
it's
disaster.
Like, I put 10 grand and nothing's come out of it. But it's actually really important that if you know you've made a loss in prior years, but it's not recorded in your tax return, or you haven't disclosed it to your accountant, then go back to your accountant and say, hey, these are the records. I actually made a loss in prior years. So then this year, if you do plan on selling this year, then you can reduce the current year gain by those losses in prior years.
Okay. I've got another question for you because I know this is going to be on everyone's mind. They're sitting on altcoins. Altcoins haven't done too well in the past 12 months, basically. I know even for myself, I've got some altcoins sitting in my company fund or my company vehicle. And a lot of them are red. I'm not ashamed to say it, guys. Some of them are even negative 80%, right? Now, for me personally, just so everyone knows, the majority of my funds are in Bitcoin, right? I'm talking like 80, would be probably closer to 90% of my funds. So when I've got altcoins, they were just like gambles, and I knew that going in, okay? But the question is, Simon, should I sell those altcoins now, realize the loss, take it off my taxable income, or should I just sort of just sit on it and then hope for the best and maybe they'll go back up?
Yeah. So unrealized losses have no use to you. if anyone's listening, you need to realize those losses.
So I need to sell.
Exactly.
Yeah.
You need to sell those assets in order to trigger a capital gains event, and that crystallizes the capital gains loss, which you can then use to reduce your capital gains in the future or in the current year. So definitely yes. If you're sitting on these coins and you don't think there's any hope that they'll go up in value, sell them, crystallize the loss, reduce your current year tax.
Okay, if I don't think they're going to go up in value. Otherwise, if they do, they could come back around by 2030.
Yeah, there's. I guess if you do think that it will potentially have a revival, then you can consider buying back at a later stage.
Right.
So there's nothing stopping you from buying back the asset after you've sold it.
So I guess the point then is that if you want to realize a loss, reduce your taxable income, if you think if the altcoin's never going to come back again and you think now's the time, probably before this end of financial year would be a time to sell it, realize the loss, and then claim the loss.
Correct, yes.
Yeah.
And when it comes to capital gains losses, they can only be used to reduce your capital gains. So if you've
Not your day job, essentially.
essentially not your day job.
Oh,
Yeah.
okay. But you add it on though for the when you're working at the. Oh, I see.
Yeah. So it's one of those ways in which the tax laws get you.
So I just want to make that clear to people listening. If you've got a capital gain, the gain is added to your taxable income. Let's say your PAYG job, if you're an individual, and then you pay tax on that portion overall, right? That's the short version. But if you make a loss, they don't say, well, you earned $150,000 through your day job. You made a loss of $50,000, so now you only have to pay tax on $100,000.
That's not how it works.
That's not how it works.
Yeah,
oh, they've got us.
It's a bit. It's not the most intuitive way that current law applies, but it is what it is currently, and that is how that's why I think getting really good tax advice helps you stay out of trouble as well.
Here's another myth that I think people have is that I don't want to go to an accountant. Now, this is regardless of crypto or anything, right? I don't want to go to an accountant to do my tax return because it's going to cost like, I don't know how much it is these days. Is it like $500 for an average one or something? Is it?
Something like that.
Yeah, 500. Why should they go to an accountant though?
If you've made money in crypto in the last 12 months and you've made a lot of it, and by I mean a lot, I don't mean like hundreds of millions. I mean, even if it's like 100K and you're sitting on unrealized gains, or you've got a day job that's very well paying, and you want to reduce the tax that you have, having a really good accountant, whether it's crypto or otherwise, can pay its own dividends.
Yeah. Right.
I'll give you an example. So there is a rule in the tax legislation that lets you roll over your gains from your individual trading or investing into a company and essentially defer the tax.
Right.
In order to utilize that, there's very specific steps that you need to take and also specific requirements. But say, for example, you're sitting on a $1 million, sorry, 100K unrealized gain on Bitcoin, and you're trading in and out of it, and you think that you can grow your 100K gain to 200K, 300K, 400K because you found this amazing trading strategy or this alpha that you have, then potentially it's worth moving that trading into a company structure, because the company tax rate is somewhere between 25 and 30%, depending on the type of entity. Whereas in your individual name, it can go as high as 47%, including Medicare levy.
Right.
So, and there are ways to transfer your trading in your personal name into a company without triggering any of those intermediate taxing events.
Yeah. Well, that's amazing, and I think basically what you're saying is you should spend the money to go see an accountant because ultimately they can save you money, and that's what I would say too.
Exactly.
Yeah.
A good accountant.
Simon, I just want to say, look, we're running out of time. I'm going to have to get you back on another episode because there's so many other things I want to talk to you about, including what's a really big topic right now, and this is probably coming off the back of unrealized capital gains taxes. Should we set up a bank account in another country and pay zero tax? Is it even possible? But I'm sure you can answer that into the future. I want to say, Simon Ho, thank you so much for joining me on Crypto Collective. It's been an absolute pleasure. And ladies and gentlemen, if you've got any questions for Simon or myself that we didn't cover today, put them in the comments and we'll get to those later. And I look forward to seeing Simon on a future episode.
Thank you, Matt. Thanks for having me.
Cheers. Thanks for tuning in to Crypto Collective. If you've enjoyed this episode, the best way to show your support is to leave a 5-star review on Apple Podcast or Spotify, and make sure to subscribe to the YouTube channel so you don't miss an episode. You can also find more of me at I'm Matthew Fraser on all social media platforms.